day traders from across the globe, and welcome to the 802nd edition of Short-Term Trading Live with Oscar. Hello traders, my name is Oscar Carboni. I've come direct out of the pits of Wall Street in New York City, where I spent many years learning this craft. And I've come out of those pits to teach you the tips, tricks, and techniques that I learned to perfect while I was down there with all the old pros. And I share them with you each night in our nightly videos. So let's pay attention. If you are a trader, this video is being filmed on Tuesday night for Trading Wednesday. That's 11/30/2011, last day of November. Traders, what's on the board? Right off the bat, let me say this. Flip, flop, flip, flop, flip, flop. That is all the OMNI has done for the past few weeks. Traders, I've been using this OMNI for the better part of my 30-year career. I think it's flipped more in the last 8 weeks than I've seen it flip in all 29 other years combined. I've never seen such flip-flopping. Now, on the other side of it, OMNI's been deadly accurate with a slip up here or there. When it gets stopped out, it's been all over these market flip-flops. So, if the OMNI wants to flip and the market wants to flop, well then let them flip-flop as long as we're on the right sides, right? So, a lot of flip-flopping going on from OMNI. Last night, we started this video off with a green OMNI for Tuesday, and that worked really well. When we talk about flip-flopping, sadly to say, we are going back to a red OMNI for trading on Wednesday. And here's some of the reasons why. Before I get into that, traders, you must know that futures trading is extremely risky and can cause substantial financial loss. If you do not recognize the risks behind this game, if you do not have risk capital which you can possibly lose, and if you do not recognize that a stop is your best friend, you certainly shouldn't be trading the futures markets because they're quite volatile and dangerous. For you traders out there that understand the risks, that have risk capital and are ready to trade, rock and roll, and let's get moving. So here we go. OMNI, green, red, green, going crazy, but making good calls doing it, right? So that's the first thing that happens on the board. Called for the Tuesday up move, we got it. Calling for the Wednesday down move, at least at the beginning of trading. And then we'll see if by the end of the day something else needs to be done, but we start off Wednesday on the short side. Why? OMNI is looking for lower on Wednesday, and there are two very obvious reasons on the charts. Here are the two of them. One, there is a swing day in the NASDAQ and many other indices if you look at them properly, but the swing day in the NASDAQ is unequivocal. You have the 2-day rule going into effect. I opt to call the 2-day rule. The 2-day rule is this. If you have been in a bear market and you have a 2-day run-up, big days, that day, the second day, usually starts to constitute a sell signal, and day 3 you come back down. It looks a bit like this. Let's say you're in the markets right now, and the market's been going down, 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 down. Suddenly you get a big day up and a second big day up, which turns around and ends up acting like a swing day. This would be your second day up in a bear market, and you look to sell this. That is Tuesday, selling on Wednesday. This already happened. Here's the day we're going to capitalize on Wednesday. Traders, if you like the analysis I'm about to show you in this chart segment, simply come on down to livewithoscar.com. Jump into my free trading rooms where I am at the helm and I teach you Omniacs how to gauge markets, how to follow the charts, how to create a trading plan, and then how to trade that plan. It's very easy to come up with a trade. If you're good at analysis, what do you do once you have the information? We also help you in that area. Come on down to livewithoscar.com. Now let's go take a look at some charts. Okay, traders, the first thing we're going to look at is the emini S&P daily bar chart. First things first, major failure at the 200 bar moving average. Then we drop below the pennant, and we have been in a bear market lately, right? What else would you call this? It's been in a bear market lately. Now, if you look at this chart, it starts up here in the top and ends up down here. Well, down here. So it's not exactly bullish, right? I mean, the things I've shown people before is if it starts up there and ends up down here, it's bearish. Well, it started up here and it got all the way down to here and now it's right here. So overall picture is you can't look at this chart and call it a bull, right? So lately we've been in a bear market and it had some bear acceleration over the last few days, the Thanksgiving week, right? Well, here we are, Tuesday going into Wednesday of this week. We had a big rally on Tuesday, or on Monday I should say, and another big rally on Tuesday. And then we came down and settled like a swing day almost, especially in the NASDAQ. The emini S&P did not settle as a swing day. It settled about in the middle, but it still rallied up and came back down and settled mid-ground. After two big rally days, after being in a bear market, this will constitute our two-day rule. Day one up, day two up, then you start looking for the downside when in a bear market, and lately that's what we've been in, especially when you look at this piece right here. So, looking at the S&P daily bar chart, we've been in a bear market, we've had two major rally days up, now we look for some downside. Let's take a look at the other thing. Now we're looking at the NASDAQ daily bar chart, and it has a swing day, an unequivocal swing day. The market rallied all the way up to here, came back down and settled right there. That is a swing day. Remember, we've already broken down severely from the 200 bar moving average, and we have been in a bear channel lately. So this is our latest bear market. We rallied for two smart days, a big one here, another one here, and settled on a swing day. That is bearish. We start the day off by selling indices on Wednesday. If they want to turn around and move higher, we'll deal with it at that point. But we're starting off on the downside with a red omni for our US indices, and there's your reasoning why. So traders, there's your flip-flop, and there is my technical argument for the red omni. Now, you know how we clap for red omnis, right? You know, we don't like to clap for red omnis, but hey, we'll trade the downside, we'll trade the upside, we'll trade the flat side, we'll trade whatever side it gives us. We are day traders. We were bullish yesterday, bearish today. That's okay. That's what makes us day traders. As the market morphs into another move, so do we. Omni is all over this stuff. Omni is a shorter term trader. And lately it's finding the reason or the need to flip and flop, and we will do the same. Traders, I'll see you at the site. Don't forget, come to livewithoscar.com and always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop soaring! Emotions are out! Yeah. Video number 802. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.